Hi, I'm Randall Wall, and for 13 years, I was president of this association. I love being president of the Investor Association and playing a part in helping others see success, as well as improving my own successes in life. I'm grateful to be here, and I'm grateful to share some knowledge with you and to introduce some of the other players today who are going to teach you about a great many things. We're going to learn about the legal ins and outs with Jeff Brailio. We're going to learn how to close sellers with Trevor Thompson. We're going to see an actual deal that Dominique Delgado has done. And Dakota Worrell, who is probably my best friend and just an amazing guy all the way around, is going to talk about how he became a multimillionaire in 5 years from delivering pizza. So we've got some exciting things to do today and some exciting things to learn together and experience together. Also, I want to thank you for allowing me to do this via video because Saturday is my Sabbath and I'm pretty confirmed in that, I guess I should say, so I would beg your indulgence the fact that I'm not there physically, but I'm there in spirit. So let's begin. I'm going to share my screen with you and let's see what we can learn together. All right. So seller financing and why it should play an important part in your life. That's something that is super important. And 2 years ago, when I gave my last seminar, I think on seller financing, we saw that credit card debt and interest rates were both heading towards record high. Well, today in 2024, we see that it is not heading towards record high. Every day it is achieving new record highs. We see that the Fed is, the Fed's bankrupt. Okay, let's just call it like it is. The Fed's bankrupt, is 200 billion in the hole, and it's going negative about 10 billion a month. Its funds that usually it would use to cover that are called the SOMA funds. I think it's short-term operational management, accounts or whatnot, are $1 trillion less on the market than they are in their book value. So financially, this country is in trouble, and a lot of people realize it. The feds keep cutting the interest rates. They've cut them 3 times, and the mortgage interest rates keep on climbing. So you might ask, why is that? Why aren't the mortgage rates dropping? Well, we've still got problems with inflation. The government doesn't tell the truth. When their lips are moving, they're lying. Um, I'm going to call it the egg test. So I go into Walmart, I buy 5 dozen eggs in 22. It costs $7.66. I watch those eggs climb up to about $30 for 5 dozen eggs, and now they're down to about 14 and change. So double what I was paying just a couple of years ago. That's inflation. That's real inflation. That's inflation that comes home to mom and dad and our family and our kids and everybody else. So the mortgage rates haven't dropped yet because they're hesitant, and the 10-year bonds, not what the Federal Reserve does, has the greatest correlation with where the mortgage interest rates are going to be at. Here's a prophecy for you. So I made this prophecy on November 7th here. So I think it was just over a week ago. But the real estate market's currently in the worst condition with fewer sales than at any time since 1995. So that's about 30 years. In another, month and a half, it'll be 30 years. So it's far worse than 2008. So what's the difference? And why doesn't it feel like that? It's because the media hasn't told you yet that it's bad. And until it's in the news, until you see it on Facebook, it just isn't true. And it doesn't feel like it to me either, to be honest. It doesn't matter what party you're in, whether you're a liberal, whether you're a conservative, the media doesn't care about the truth. It has an agenda, their own agenda, and they've been doing anything and everything they could do to support or bolster the Harris campaign and make Biden Harris look good. And I'm a Democrat, so I'm just calling it as I see it. They have yet to weigh in on the market conditions with any real enthusiasm. They've been helping to hide the truth. So my prediction is, and you can let me know if I'm right or wrong or not, sometime in January, February, March. But after the January transfer of power to, Trump Vance from Biden Harris, in the same measure that the media has kept silent for the last 4 years, really, on these economic issues. They're going to pull out their magnifying glasses, and that's all you're going to start seeing is how bad the economy is, how bad Trump's doing, how bad the situation is here in America. America's bankrupt. That's the pure and simple deal. It's just like the corpse that's still moving. It still looks like it's alive, but it's dead. Some things are going to happen, some things are going to change. Let's hope they change for the better. Until the media says something, it's just not true. Now, it doesn't matter what happens, there's always opportunity. But make sure you're looking for the real opportunity and you're always looking for the truth, because lies in the media have more weight than the truth does out in the public. So if you cut out social media, your paradigm shifts. Harvard Medical did a study, and they said that for people who cut down social media by 30 minutes, just 30 minutes a day, experienced exponentially higher levels of satisfaction, peace, harmony, and less stress in their lives. I can tell you this, the same thing is true here. Once you rise above those clouds, we'll call it the social media clouds, the road might still be turning this way and that way. You're still going to have some challenges, but you're going to feel better about doing it, I guess. So I went from going to Germany to buy this castle, home of Maximilian the 15th. It's in Preußen. It's near Dresden, and it was beautiful. In fact, it's probably 60,000 square feet. It was on 15 acres, and it had several large buildings that came along with it, and it was right on the Elbe River, one of the most famous rivers in Europe. And so it was great. Also, seller finance transaction in Germany. So I made my play, made my offer, came home to I want a divorce. All right. So there, my dream, that dream died for a minute, but seller financing got me on my feet again quickly. In fact, divorce is a financial tsunami. It's something that you don't want to deal with. The best advice that I could ever give anybody when it comes to financial advice is don't get divorced. It's a horrible thing emotionally, it's a horrible thing mentally, and it's a horrible thing financially. So when I divorced my second wife, I gave up everything but $8,000. She got retirement, she got, all the money we had in the bank, everything else. I started over again. That was probably 12 years ago. Um, but I understood something, and I understood that leverage was the only way I was going to get back on top again. All right. Leverage is what makes real estate great. I was worried about losing the title of being a millionaire, etc. I started out with $8,000, 2 months worth of expenses for me, and I leveraged that through seller financing. About 4 years later, I'd leveraged that into $1.4 million. Okay. Using other people's money because you can't go very far with $8,000 and very little of my own. So when it comes to life, when it comes to success, when it comes to real estate, when it comes to seeing your dreams come true, you're only limited by your imagination. When you were a kid, you believed this plane could fly. In fact, I knew it could. My brothers and I, we built a giant airplane wing out of some old barn wood that we had on our farm. We pulled down this barn, we put the little, nailed the little wooden shingles there onto this giant wing. We tied it onto a Swin bike, an old Swin bike. We pushed it up the steepest hill that we could find in the area. We built a takeoff ramp, basically known as a jump, at the bottom of this hill. And I and my brothers got on this bike. I think there were three of them, and we pedaled down that hill as fast as we could, hit that ramp, became airborne for all of, I'm going to guess, 5 to 7, 8 seconds, and then had an epic landing. And you can imagine what that's like. Thank God that nobody died. But it was fun while it lasted. And in real estate, in life, in seller financing and transactions, you're only limited by your imagination. And you need to realize that it doesn't take money, it doesn't take credit, it doesn't take banks. Okay. And I am 10 over 10 over 10 certain about that because I've proved it out. And it doesn't take a college degree because I don't have one. Visualize your success, visualize you doing this. Blind people do it all the time. When a blind person is going around their house, they're visualizing where things are at, and they've never seen those things, but they do it. You can do it too. And it doesn't take your money to do it. So let me talk to you about that for a second, just, person to person here. When I was divorced and I didn't have a lot of money, do you think that what I'd learned about investing or what I had in my mind, my brains left me? Absolutely not. All it takes to be successful, it never takes money. It takes an idea. It takes a little understanding. It takes a little bit of skill. That's important. It's so important. And if you can network, you can find that money. So I did a number of seller financing transactions. I'll just talk to you about, one or two. So my brother-in-law is actually a colonel in the Air Force today. But one of the things about the military, and I'm ex-military, is people retire from the military and they very often, or very seldom, I should say, have any real assets. They don't own real property. So I contacted Brandon. I found this great deal, and we said, "Hey, Brandon, you can come in, to give us $20,000, and you can be a third owner in this property, in this rental property." And it was a good deal. And a few years later, I said, "Brandon, how about 50,000 bucks, and you could be half owner in this property." Okay, so him and I own a property and have owned other properties together. In fact, we just sold one. We sold another one where he came in with the money. I didn't have to, and he's not the only one. There's a lot of people that'll do this because it's a benefit. He doesn't know how to find the deals. He doesn't know how to do a seller finance transaction, and I can make his money go a lot further than he can. Trevor is going to talk to you about that and talk to you about how to sell the seller on this later, but that's something that's just really, really true. So back to sharing the screen, and here we are. So it doesn't take your money, but if you can network, the world is your oyster. Just reach out there and talk to people. Our team has used money from Greek dentists, trusts in California, school teachers in Oregon, family, friends, neighbors, you name it, we've done it. And these are all people that we have made their lives better. They are happy that we were there, and they've made our lives better as well. So you can do this. You can leverage it. Don't be greedy. If I would have said, "Oh, I want all the money for myself," it would have been a mess. Instead, I was happy to give up 30% or, a third of ownership in that property. It was a great deal because, you know, you can't build, you, let me put it this way, a little bit of something is better than a lot of nothing. And I had a lot of something, and for their investment, they got a little bit of something. So we were both, it was a win-win. So when everybody else is running for the doors, investors have to do an about face and head in the opposite direction. And that's what you need to do here. Because, I talked to you about how bad the economy is, all the stuff that's going wrong, worst market in 30 years. And it is. I mean, if you look at the numbers, it is. That is no lie. But it doesn't feel like that, and it doesn't have to feel like that, and it doesn't feel like that to me. So people ask, Forbes says, what's it going to take for mortgage rates to drop? And it says if you are waiting for a mortgage rate drop, an interest rate drop so you can purchase or refinance, you might be in limbo for a long, long time. Newsweek said many Americans may believe there's no way for them to feasibly get a mortgage rate below 4% with today's interest, but there's still hope. And it talks about this. And it says you could save more money with a sub 4% mortgage rate if you know where to negotiate it and how to invest, experts say. So you're going to learn that today. We're going to talk to you about that today. It's important. One of the keys is looking out, and it's not really a seller finance, but it's a creative finance deal, is you can assume any government-backed mortgages that's done by the VA or FHA. You don't have to be a vet to do it. And you qualify at the same level that person qualified at when they bought their home and got a 2.5, 3.5, 4% interest rate. And so you can do that. And there's a number of agents, a number of people that focus on just that. Currently, about 23% of active mortgages are assumable, more or less 12 million of those, and probably they say that 14% of those, or 7.2 million, have interest rates under 4%. Now, that's interesting because I hear a lot of statistics. And on the high side, it's that 80% of home loans are under 4% or 4% or less. On the low side, it's 65%. But whatever percent it truly is, it's well above half, and there's a ton of fish out there. So again, do an about face. Everybody else is complaining about how bad the interest rates are. They're worried about it. They're freaking out. It's an opportunity. Run the other way. 2022, I captured this and kept a copy of it. It says, as inflation heats up, 64% of Americans are now living paycheck to paycheck. Is that a problem or an opportunity? More Americans living paycheck to paycheck than 5 years ago. Okay, this is today. It says that the data shows that. And so Bank of America is the one that's making this comment. There's a world of opportunity here if you're prepared. You can leverage to pay off debt and create the life you want, and you can help other people get what they want at the same time you help yourself. That's the best thing. I like helping others. Problem or opportunity? It's all in what you focus on. It says even wealthy households are living paycheck to paycheck. That's homes that are earning $150,000 or more. There's a significant number of those that are living paycheck to paycheck. See less problems and see more opportunity. You're going to be a lot happier, a lot more successful, and you're going to find joy in this work. It says, well, we already talked about that, but yeah, I mean, it depends what you're looking for. Are you looking for a problem or are you looking for opportunity? So again, focus on the opportunity, and let's talk about what those opportunities are. So opportunity is all over. It's all around you. As I said, industry analysts estimated that 80% of existing mortgages had rates below 5% as of early 2024, with a substantial portion below 4%, like more than 60%. That's like more than half, right? Huge. Don't run for the exit. When the building's on fire, an investor runs in and everybody else is running out. And this building isn't burning yet. I mean, there's problems. We've got banks right and left that are weak. We've got the Federal Reserve, the Bankers Bank, they're bankrupt. The only thing that they can do is print money, which causes inflation, and we all know how that story ends, just like Argentina. But there's opportunity there. I have a friend that lives in Venezuela. In fact, he stayed here. He's a good friend of ours. We've done dinner. Ingrid, my assistant, is his aunt, and so he's amazing. But from Venezuela, one of the crappiest countries on earth right now, with one of the most corrupt governments, most crime, food shortages, everything else. The guy's making $500,000 a year. All right. And it's because he's running in while everybody else is running away. There's opportunity there if you can just take a minute, breathe deep, seize it, do an about face, and move in the direction of your goals. Your future's here. Your future is knocking at the door. Now, a lot of times, we're saying, "Oh, I just want, an opportunity. I just want an opportunity. I'm going to be ready when opportunity knocks." Well, it's a common axiom that opportunity doesn't knock twice. All right. So be ready to seize it. When you see that opportunity out there, seize it, because indeed this is your future. And there's always more opportunity out there than you might imagine. And if opportunity doesn't knock, build a door, kick the wall down, whatever. There is opportunity here. In 1929, the stock market crashed. It was such a bad crash and so bad on the economy that men were jumping from their office windows on Wall Street. And there was a lot of suicides, and it was horrible. But there were still a handful of guys that made millions and millions and hundreds of millions of dollars out of what happened, out of that failure in the stock market, out of that over-leveraged market. They were there. They created a door. They saw the opportunity. You can do it too. The importance of multiple streams of income, I can't overstate that enough. If you're focused on one thing only and just one thing, you're going to struggle, because the more tools you have in your arsenal, the more things you have in your tool belt, the more money you're going to make. And that's why you're here, right? When we're talking about opportunity, we create a lot of opportunity ourselves. And I'm going to give the most credit to God. To be honest, it's God. Steve Jobs, Bill Gates, all those guys, they saw an opportunity, but a lot of what they had was, if you read the book by Malcolm Gladwell, I think it's called Outliers, they're in the right place at the right time. Okay. The market was right for their success. In fact, that was most of their success came from that. What they did was just to harness what was going on in the market at that time. And you can harness this market as well. So opportunity, opportunity, opportunity. All right. So let's look on the MLS. I pulled it up today and I put these in there. I put things that looked like, people would be interested in either doing creative financing or seller financing, VA, seller finance, lease option of any kind. Owner second, seller subordinates. That means that the seller will take a second position behind another loan. Assumption qualify, assumption simple. Simple assumption can be something as simple as saying, "Hey, sell me your house. I'll make the payments to the bank, and you do a wraparound or whatever on that." Regardless of that, there were 7,269 matches to that when I put it on the MLS. There's over 11,000 listings right now throughout the state, and there's a lot less buyers. Okay. In fact, it doesn't have to say any of these things. If you ask people, the house has been on the market for a little while. It's amazing how many people think about this. My house, the appraisal came in today. I've got it under contract. We're selling in the middle of next month. And, the appraisal came in high, like a lot higher than I thought it might have. I was always worried, and maybe I'm a little negative on that, but it was a great feeling. And I thought about seller financing this property. I thought about seller financing it for like 800,000. So there's a lot that you can do out there. In fact, look at this listing. This listing I pulled up like 2 days ago. Explore flexible seller financing options on a charming single level home in Kearns with either a very low down payment or standard down payment of 15 to 20%. These people are handing it to you on a paper plate. I don't know if this is a good deal or not. I'm assuming it's an investor, but it's something that's out there. It just kind of proves the point. You can do this anywhere. You heard that I was doing a seller finance deal in Germany. Um, we've done it in Canyon Rim, Harvard, Yale, West Valley, 3,000 down in West Jordan. I bought this house from a retired postal worker, a great guy named Galen. And he needed 3,000 bucks to move to St. George. He'd build a house down there, wanted to go down there, and all he needed was $3,000. I gave him 3,000 bucks and kept that house for maybe 3 or 4 years, sold it, made a pile of money. This one I bought for zero down. It was a couple who had lived together for quite a while, never got married, and he decided that, what could be better than one girlfriend, but two, except for the one found out about the other, and they had this house together. And so it was a problem because where the three windows are, he had pulled the sheetrock down, he'd gutted this house in anticipation of building a new master suite or love nest or whatever there. And so it wouldn't qualify for financing. So I went in, they're crying, she's crying, begging me to help them out so their credit isn't ruined, etc. And I did it. I just said I can't pay anything because I'm going to have to come in with cash, etc., to fix it. And it wasn't worth a ton at the time, but I fixed the property up. I rented it out, sold it for well into the six-figure profit. It was a good deal. They're all good deals. Sandy, all right. I'm living in this house here, the one that's got the huge garage that's as big as the house. I love it. It's like 60 by 40 and 2 stories tall. It's awesome. I did both of these houses on the same street. Both were seller financed with at least $30,000 down. And it's been a great deal. We made a ton of money on this one over here. There on the right, as you're looking at the screen, that was a great deal. In fact, when we sold that property, it was the highest selling property in the area because we do a great job on our remodels. And this house here, I bought about 11, 12 years ago for just over 200,000. And yeah, we're selling it for many times that today. And if I was to go over this way, just about a block or block and a half away, we did another seller finance transaction just last year. And so they're there and they're all over the place. You just have to be aware of them. Trevor's going to talk about how to close that. Now, Trevor Thompson is a closer extraordinary. He's great at it. One of the best closers I know. And we've worked together for a long time. Love him. Just a great, great human being. Here's a house that he closed for us that I was so proud of him on. 20,000 down, no payments for 6 months, 386,000. It needed some work inside. It didn't look quite as good here as it should have. But what's exciting about this one is we only brought $20,000 down. Yet, right after closing or at closing, we made more than $100,000, or we took a check home for $100,000. So, how does that happen? Well, let me show you. It's being creative, right? So, here where it says $100,000, you can see this little area back here. It's 28 feet, I think, of the back lot. The back lot was deep. Now, cutting off land doesn't decrease the value of these houses at all. You don't lose anything on them. Over here where these trucks are, you can see this guy's a builder. He's got some dump trucks there. I think there's a forklift and, maybe a backhoe or something. And he doesn't have enough room. So Trevor talked to him and said, hey, how'd you like some more room where you could build a bigger shop, you could park your cars, all those kind of things there. And the guy said, yeah, I'd love to do that. And I think it wasn't 100,000. I think it was 110,000 that Trevor actually negotiated with that guy. So we closed and got paid. We got paid enough to remodel the house. If we did nothing else and wholesale that house, we had $100,000 profit. It was a great deal. And so I can't speak enough of that. You're only limited by your own creativity and your ability to think outside the box. And this is significant because 90% of college graduates, and I'm not one of them, went the opposite direction. 85% of all college students want to own their own business when they enter college. 4 years later, when they take the exit poll, it drops to between 8 and 9%. Because, let me stop sharing here for a second. And the reason it happens is because for 4 years, people are telling them, you have to color inside these lines. You have to be in the box, okay? It takes money to make money. That's like one of the biggest lies ever. It takes an idea to make money. That's all it takes. If you got a good idea, you can get money from anywhere. I do it all the time. Simple deal. Success is going the other way, all right? And so if, you went to college, great. If you didn't go to college, great. But there's no reason why you can't do this too. And in life, you find that when you're trying anything, most people are just afraid. A few years back, I went to this charity event and I've got a picture, I think, on Facebook still. My arms around Julie Harmon, Miss America. Okay, she's Miss America in 2016. And some of my friends and other people said, Randall, how did that happen? And I said, well, the problem is you guys were all afraid to ask her. Everybody that knew her, you're afraid to ask her. I wasn't afraid. I was confident. I asked, because what's the worst thing that she's going to say? No. Okay. Charlene Wells was Miss America here back in the 80s. And I was in Spain with, there's a brother or cousin, Jeff Carter is his name. Nice guy. And anyway, the story is told about Charlene that somebody asked her, this beautiful girl, said, how many times did you date? She went to BYU. That's like a big school here in Utah for all the Mormons, I guess. And so she said, I went out on one date. I was only asked out one time during my entire 4 years of college. Guys were intimidated. They just wouldn't ask me out. So if you want to succeed in life, dating, finance, real estate, etc., ask, put yourself out there. What's the worst thing that's going to happen? They're going to say no. One thing when I'm faced with problems or challenges in life, I ask, what's the worst thing that can happen? And I really drill down on what's the very worst thing that can happen. And I look at that and I say, if that's the worst thing that can happen, am I okay with that? And if I'm okay with that, I move forward. If I'm not, I make a change. I change direction. So that's a good way to handle problems, by the way. We've done this hundreds of times. So We've helped Ingrid do it. Trevor Thompson has done it. My wife, my son, Josh Christensen and his brother Brandon, the one who's my brother-in-law. So Josh and I have worked together for years, and uh, his brother married my sister. So we're kind of close. But there's a lot of these kind of deals out there. So today, some amazing people are going to teach you how to spin straw into gold. Okay. Now let's talk a little bit about the types of seller financing. So here we go. All right. Seller financing contracts and outright purchases. So these are straightforward ones. Bond for deed or contract for deed or land installment contract. This is basically they put a contract together. They usually will record the contract. The deed doesn't change hands, so it doesn't move from the seller to the buyer until the buyer has either paid off the property or refinanced it. And, that's great because the buyer still has equitable interest in the property, equitable title. They get all of the tax benefits that a regular purchase does. If they rent the property, they get to make money on the rental, all the same benefits anybody else does. Then you have a trust deed note. If something's paid off, we just do a trust deed note. Or we do a wraparound mortgage if it's got a trust deed on it, a mortgage on it already, with a trust deed inside. So if it's got a mortgage for 100 grand, we're buying it for 150, and I'm using low numbers here just because I'm a math idiot. But we can come in with some cash and wrap that existing deed with a new one that says I'm going to pay, whatever it is I'm going to pay that's on top of that. Some real opportunities there. I've got a couple of rentals. I've got one in Ogden that we've got in our company that's over $1,000 a month that I came in with 20,000 bucks on, and it's cash flowing 1,000 a month on a wraparound. There are so many things that you can do with that. Then we have on the other side, we've got what we call rent to own, lease options, master lease options, master leases. And so those are all different types of rent to own. So lease option means that you put a little money up and you have the option to, not the obligation, but the option to purchase that property at whatever price that we've agreed on or before a specific date. And so that's kind of nice. Actually, there was a guy that made $1 billion in Portland and Seattle because he went right down the main streets in both those cities and optioned some of the best property in town. He says, I will give you, X amount of dollars for this if you'll sign an option with me. And then he went out and found some international buyers and sold it at a huge profit. It's amazing what you can do. In fact, just a quick story. So I lived in Burns, Oregon. If you've ever been there, it's 3,000 people. It's a cow town. It's 130 miles from anywhere. And I had one really smart banker at US Bank. Her name was Holly Smith. And this gal had gotten an option like this on a ranch. And she got an option for $2 million and sold that option for $1 million to somebody else. And so she cleared $1 million on an option. And she was smart because she did that inside of an IRA. And so she didn't pay any taxes on it. The full million went in and funded her IRA. She used the IRA to pay, $1,000 or whatever it was for the option on it on this ranch. Went out and found a buyer and then loaded her IRA. And she did it when she was in her 40s. Really sharp woman. Master lease option, those are a master lease. They're kind of the same. Basically, you rent the property and then you sublease it or rent it out to somebody else, and you get the spread between what you're paying and what they're paying. If you add the option to it, you have the ability to buy the property at the agreed upon price at that time, which is an opportunity to, not the obligation to. So if the market's going like this, you're not sure whether you want to buy the property or not, but it'll be a good rental, then you can lease the property with that option. So Josh and I have had different properties that we've had in different countries. Josh has been really creative, oil wells and fish farms in Thailand, and let's see, mango farm in Panama. We've got assisted living in Asia, apartments in Asia, all those kind of things. This stuff works everywhere. I've never found anywhere where this stuff just doesn't work. And so it's a real opportunity there if you can see it. One of my agents here in Salt Lake, LeBeau White, this is a Mormon town. There's lots of Mormons here. I'm a Seventh-day Adventist, hence Saturday, and hence why you're seeing me on video. But he knew a couple who was going on an LDS mission as mission presidents and knew that they'd be gone for 3 years. And so they wanted a little bit of money to help them on their mission, and they wanted somebody to watch over the property. They didn't want to leave it empty. So they leased the property to him. And then he made a deal with them and says, all right, I'll handle all the repairs under $100 if you'll handle everything over 100. They said, no problem. LeBeau subleased that out to another renter with the understanding that the renter was going to pay everything under $100. So he wasn't responsible for anything. Renter paid the first 100, the owners paid anything above $100. And he cash flowed 1,000. It was actually $1,200 a month. He did that for 3 years. So it was about $40,000, I think, 36 to $40,000 over that 3 year period. He came in with nothing and he left with something. And so I don't know about you, but an extra 1,000 or 1,200 bucks a month, that's a pretty good deal for me. So honestly, every situation is different, and how you choose to do it is up to you. A lot of guys have heard me talk about this in the past, and I use what we call the five fingers of real estate. So here's what I'm looking at. I'm doing a mental sieve whenever I come up to a property or somebody who's selling or talking about maybe wanting to sell. The first thing I do is I say, all right, can I wholesale this property for easy money? Can I flip the property? Can I hold it for a long-term rental? Can I sell or finance that property in some way to either flip or hold as a rental, etc.? Or last, can I collect a commission on it? Because those are all good money streams and good sources. And other than some extremely creative deals with paper, that's pretty much the five ways that you can make money in real estate. So that's what I do. Every time I look at a property, I'm going through the five fingers of real estate. Can I wholesale it for fast money? Can I flip it? Can I hold it as a rental? Can I sell or finance it or lease option it? And can I collect a commission? So let me share my screen again. And here we go. All right. Honestly, every situation is different, and how you choose to do it is just up to you. There's a lot of pros and cons, but let's talk about a few. We're going to talk about some benefits for the sellers. And actually, hopefully this video will be on YouTube. I'll try and keep it on there so that people can refer to it later. But you got a quick closing for both parties. Continued payments, income over time, taxes, for the seller spread over time. All buyers qualify. It's you can provide cash at closing and then payments. It's easy to sell, even bad property. You'll sell at the very peak of the market or on top of the market more than it's worth if you have great financing. And it's higher rates often than other types of investments and market because of leverage. So we'll talk about that in a second. The buyers, everybody closes, can qualify. It's easy to close. It's fast. There's no mortgage insurance, no PMI. It's low closing costs, no lender fees, low money down or very little money down, no money down. You get to negotiate the terms with the seller, and you can actually have pay for these houses. Your down payment could be from a credit card, or you might trade a motorcycle, a boat, or something else. You can negotiate anything. This is so much better than bank financing. Additional benefits are, I think I already mentioned that, but just selling at the top price, even in a rapidly declining market, bigger buyer pool, and then you collect additional interest income and defer tax payments or sell who you want to sell to. So let's talk about a little bit bonus here, straw to gold. All right, so my son bought a house in early 2022, and it's about 500,000. I think they came up $25,000 down. Anyway, his monthly payments 2110, and I think I've got that right at 3.5%. So, that's okay. It seems like a lot of money to me, but if you raise the interest, so if my son sold this house to somebody else on seller financing, and he raises the interest rate on that same, I think it'd be what, 475,000. At 5%, he makes an extra, $413 at 25.23. At 6%, he makes $707. Okay, every month. And that's just not, we're not talking about, increasing the price or anything else, just keeping the price there where it was at, running with these numbers. This is spinning straw into gold. I mean, you could do it as an agent, you could do it as an investor, you can do it as anybody. You just boost the interest rate a little bit and you'll get monthly cash flow every month. So when you're trying to sell this deal, if you're an agent, real estate agent, I actually own the largest brokerage in Utah with some partners, 15th largest in the country, Equity Real Estate. And the thing is that you can pick up a lot of business because you're going to sell or finance it, and you can sell them on monthly cash flow. Not only are they going to get paid for their equity in the property, they're going to get paid on equity they don't have. Because if I'm financing this to somebody at 6% and I've got a 3.5% loan, well, the fact of the matter is, maybe like my son, he only had $25,000 that he put down on the property. So maybe there's only 25,000 in equity, but that $475,000, he's getting the spread. It's 2.5%. He's getting the spread on that. So you're spinning straw into gold. It's money for nothing, chicks for free. And again, lower interest rates. You can afford more house than you can at 6.5% or 7%. It doesn't matter what your credit is. Same ownership benefits as traditional mortgages, same tax benefits as owning other owners. And it's, you get tax benefits instead of just renting where you don't get anything. And there's no limit on the number of houses you can buy. So if you're really good at this, you can go do a lot of it. And you get your down payment from credit cards, trade in a motorcycle, boat, jet ski, I don't know, anything else. It's a good deal. And there's no PMI. So right off the bat, it's a lot cheaper. So there's benefits for the seller, benefits for the buyer. So the sandwich lease option, there's just kind of a picture here. And it's probably, I didn't do the best, but I just took a picture of sandwich. But basically, we're, leasing the property from the owner of the property or the seller of the property. We're subleasing it to the buyer down here. And then the meat is in the middle. This profit is the spread between the two for you. So like LeBeau did, you got $1,000, $1,200 a month. That's awesome. Be creative. Dakota's going to talk today about commercial property. Dakota was a pizza boy. He was delivering pizza and he was using plastic bags from Walmart as his underlayment when he was trying to lay down, not vinyl, but the, what's the stuff? The Pergo, the cheap stuff that came before vinyl. Floors in that. But 5 years later, he cashed a check for $7 million. Right? He is the real deal. He is the bomb. He is focused. He is motivated, and he's better at this than anybody else that I know. Now, people ask a lot. In fact, I want to look you in the eyes here. People are always asking, they say, Randall, well, how is this different than traditional financing? Who's on title? Well, the buyer has all the ownership rights. The buyer's either on title or he's got equitable title, equitable, ownership interest in the property. He gets all the same rights that anybody else gets, whether they pay cash or finance through a bank, etc. All right. And then the next thing they'll say is, what about the interest rates? Is it lower? Is it higher? The interest rate's whatever you negotiate. So if you're a good negotiator like Trevor is, who's going to talk to you, the interest rate's going to be a little bit lower than market interest rates. But if you're on the other side, you're on the selling side, the interest rate could be higher. It could be 6 or it could even be 7%, just like everybody else, except for you're going to be able to qualify somebody a lot easier. We had a guy, a friend of mine, I helped him on his flip, Alan Johnson, and he had this little flip in Burns, Oregon, and I think it was 115,000 was what he was hoping to sell it for. We had a truck driver came in with $100,000 down as option money on a 1-year option to purchase that property. So if he didn't come up with the other 15 grand in a year, then Alan got to keep the $100,000 and turn around and sell it again. So you can negotiate anything. There's no due on sale jail. I mean, that's like, that's important. So people will talk, so, what about the due on sale clause, and act like they know something. It says that the lender may, at its option, call all sums due and payable. Here's the deal. No lenders are calling these notes due. The banker's bank, the Federal Reserve, is bankrupt, okay? Having more debt than you can pay back, you're bankrupt. And they've got a lot more than they could ever hope to pay back. Most of the banks are weak. U.S. Bank, Wells Fargo, the Zions. I don't know about Wells, but I do know that U.S. Bank and Zions have both been on watch lists because they invested in commercial real estate and other things, and they've been deemed to be a little shaky. Nobody's calling these notes due. If you want to find out if bankers or lenders are calling the notes due, go talk to a title person. Christina Moser is probably running around here somewhere. Best title person I've ever used. She's amazing. Nobody is calling these notes due. I've talked to people in other states. Nobody's calling these notes due. Somebody at UAR, this last year said, "Oh my gosh, the interest rates are up, so banks are starting to call those notes due." That is a bald-faced lie. That is something that was said in ignorance. That they weren't lying, they just don't know any better. They were ignorant and they made that comment. That's not happening anywhere. I've never had it happen. One of my friends, John Cash Locke, had done over 500 of these and only had one private note called due in like 10 years. It just doesn't happen. I mean, and if it does happen, it's extremely rare and you have options. So if somebody calls the note due, there's no due on sale jail, you refinance out of it. Or in the past, I helped somebody just basically convert their seller finance to a long-term lease option with all of the same benefits basically that they had under the purchase contract. They may not have been able to write off the taxes on it, but were able to sell it for a huge profit in the future. They got to keep all the cash. There's a lot of things that you can do there, but there's no due on sale jail. And if you use a trust, and I'm sure Jeff will talk about this, but Garn St. Germain Act of 1982 tells you in a nutshell that you can put your property into a trust for your own benefit. So whoever the person is that got the loan can put the property into a trust for their own benefit, can change title, and the bank can't call the note due. All right, that's it. I actually had somebody call once from a bank saying, "You have changed title on this, and you're the person that's the contact person." I said, "Yep, we did. The people you lent money to put it in a trust for their own benefit. This was put into this trust for their benefit." And the benefit to them was they didn't want the house, they wanted the money, and their son had lived there and died there, et cetera. And so we put it in a trust. I quoted Garn St. Germain, sent them a copy of the act, never heard from them again. Never, ever. So the only thing you have to remember is you do have to disclose the fact that there is a due on sale clause and that it's a possibility in each of these transactions. There are some Dodd-Frank exemptions. So you get one free pass basically, which is like somebody just does a deal a year, et cetera. You can't do a negative amortization loan, but you make a good faith attempt to qualify your buyer, et cetera. And there's the other one there with 3 deals. You can look at that, but you got to qualify your buyer under an 8-part test. Well, typically, a lot of people are not selling on seller finance. They're mostly buying and holding and renting. But if you're going to sell and you're going to sell a bunch of them, you're going to do more than one a year. You might want to talk to one of the title attorneys. Like at GT Title has, I think 3 attorneys on staff. Or you can talk to Jeff Brayley or somebody else, and they'll talk to you about what you have to do for a Dodd-Frank exemption, like this 8-part test here. It's basically you're just looking to make sure that they're not going to spend more than 43% of their income on their debt load. So people ask, what's a balloon payment on a mortgage? That's where you sell or finance the property for 3 years using a 30-year mortgage, meaning you calculate what the payments will be if it was a 30-year mortgage. They make those payments for 36 months, and then after the 36th month, they pay off the property or they refinance. Title is owned by whoever the buyer is. So who owns the title of the house with seller financing? It's the buyer. Our interest rates lower with seller financing. We already talked about that. They're whatever you negotiated. The bottom line is that you can do this, and now you can reach out to people. You can reach out to me. You can reach out to other people. We're happy to help you through this and to do this. Now, the confused mind always says no. So make sure you understand this. Go over it again and again. I wrote an article for a magazine that's no longer around. It's called REAP magazine. It was a real estate investor magazine. It had, nationwide coverage for a number of years. And I've still got a copy of this out there somewhere. Maybe I can give it to Dominique and we can put it on the website, but just basically explains seller financing in a simple term. And you can hand this out to somebody, a seller or a buyer or anybody else, and explain what the benefits are. I can't begin to tell you this enough or to comment on this enough. So this is Christina here with her cute son, Christina Moser, GT Title. Always, 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 always get title insurance. One of my friends, Kip Roth, thought he was cheap. He just wanted to cheap out. So he bought this property, put $30,000 in repairs in it, turned around and sold it. The buyer that he was selling it to said, I want a survey, which is, I don't know if that's ever happened to me, but they got a survey on the property. And the survey showed that part of this house was on the neighbor's property. And the neighbor said, move the house. So what do you think happened to that $30,000, that he put into the property and the profit? Didn't end up making a profit. He had to negotiate with the neighbor. I think he did okay, but it was a lost deal. And as I understand, and I could be wrong, I think he lost maybe $30,000 on that one, but I'm not certain again how that one worked out, but it wasn't a good experience for sure. So get title and then cover your assets. I use like 15 pages. By the time you put the Rep C and everything else in, there's a ton of pages. Trevor gets a little tired, I'm certain of it, but we never lose a deal because we have long contracts. It saved our butts a number of times. And I can probably make this available to Dominique to put on the website with the understanding that it's not legal advice. I've worked at this with my attorneys. I've used it myself. These are the things that I've used to make deals good for us. But it's always important to cover your assets. And then come find me. I'll be headed to Nepal here shortly, and we work with our charity over there. I took a trip. I took 21 friends, investors, real estate agents, etc., in April of this year. And we're going to do this again in February. So February 9th to the 19th, there'll be 10 days in countries. The 9th to the 19th, we're going to be in Nepal. We spend half the time working with our charity, Eternal Hope International. We have 2,000 children in 8 schools. And Dakota is one of the board members. He's amazing, Director Dakota, and he'll be happy to talk to you about that. And we'd love to have you come. It's kind of fun because we have a lot of real estate people typically. And so we talk real estate investing and on all those kind of exciting things. And I've been doing a lot in the international market for the last couple of years. I'm always following the movement, looking at which country has, the best opportunities. So, for example, Georgia, a country you've never heard of for most people, I can tell you that the GEL, which is their currency, is stronger than the dollar. It's risen 9% against the dollar in the last 5 years. They pay 11%, like 10.85% interest on their deposits, and it's a very safe country, safe banks, etc. I can tell you that in Albania, if you spend $40,000 or $50,000 on a property there, you can even go in with somebody. You can get permanent residency, which can convert to citizenship later on for a second passport, and when they become part of the EU, and if they become part of the EU, you'll get it'll be an EU passport, and you can go anywhere. So there's a lot of opportunity out there in the world. Seller financing works literally everywhere. So again, our next trip is the 9th to the 19th, 2024. This is me on Facebook. My cute wife, my baby. I'm the little fat Asian dude with the bowl of rice and running. And I just kind of like that avatar because I'm always on a diet. So I'm always hungry and I'm always seems like I'm running away from somebody chasing me saying, don't eat that. So in any event, it has been my pleasure. And I'm sorry, I should have shared that with you. I didn't. It's been my pleasure to be here with you. And so I'm sharing that screen. And again, this is me and my Facebook page, Randall Craig Wall. The next trip is February 9th to the 19th, 2024. And, come see the 8 tallest mountains in the world. Come see Mount Everest. Come find me. It's an exciting place. There's a lot of cool things there. Talk to Dakota. But most of all, let's use these things that that you're learning today to improve your life, and so that you can be not, when I say be like me, let me tell you, money isn't the measure of success. I couldn't give a rodent's tiny tuchus about the money if it doesn't do three things for me. And here's Randall's definition of success: doing what you want, when you want, where you want. If you can do those three things, you're rich on any income. Thank you so much. It's been amazing spending this time with you. Have a great day.